The banksters have lost their minds. We've got banksters all over TV and all over, media. I won't really say social media, publishing things on their websites and just generally positioning themselves in ways that defy logic and reality. It's kind of funny. We're used to the Fed, the central bankers coming out and being ridiculously bullish and sending stocks on down days back to green for the to close. But today it was I won't necessarily say investment bankers, because JP Morgan's business includes more than that, but you've got Goldman, you've got Jamie Dimon, you've got Kolonovich. Dimon and Kolonovich, the two guys from JP Morgan, pretty much single-handedly, I think, saved the stock market today, which is quite strange. You would think it would be Powell doing that. You would think it would be some other Fed lackey. But no, it's Jamie Dimon coming out and saying, hey, I'm going to expect the greatest economic growth this year in decades, and we're going to get 4 Fed rate hikes, and the economy's, it's not even going to be a speed bump for the economy. The economy won't even notice those 4 rate hikes. Or actually, I think later on in the interview, he upped his bet. I guess Goldman Sachs is saying there's going to be 4 rate hikes. Jamie Dimon says he wouldn't be surprised if there were more than 4 rate hikes by the end of 2022. And so 4 rate hikes would put us at a 1% Fed funds, more than 4 rate hikes. That puts us at 1.1 or 1.25%, 1.5%, 1.75%. That's insane. The Nasdaq fell into correction territory briefly today before it was saved by Jamie Dimon and Kolonovich. I'll get to him in a minute. Just on the threat that Jay Powell is going to start raising rates, probably within March. The market is pricing in, according to Zero Hedge, which I guess got their data from Bloomberg, a 90% chance that the Fed is going to hike rates in March. Now, in the past, even when it has made no sense from the Fed perspective to raise rates, we have seen Powell do it just because he has said he would, and he wanted to be a man of his word, and he didn't. He thought it would be too abrupt for him to cancel a rate hike that he pretty much had already announced. So perhaps we will get that March rate hike, just like we got a rate hike towards the end of 2018 when things were coming apart. But if we do get that rate hike, it's just because of Jay Powell's stubbornness and this weird fetish he has for trying to make it look like he doesn't care about the stock market when we all know that he does. He has to perhaps go forward with 1 rate hike just to prove, hey, even though the stock market's going down, I don't care about that. I'm data dependent, and the stock market, that's not what I look at. I look at the real economy, and everything's fine, and so I'm going to hike rates. And then what's going to happen? The stock market's going to crater. It's going to hit, let's say, 15% down, maybe 20. I highly doubt it gets that far before the Fed relents. And then Jay Powell's going to come out and he say, I think we've had enough rate hikes for now. Maybe 1 rate hike a year. Maybe we'll just do 1 rate hike this year. We'll see how that goes, and next year we'll revisit it and see. Maybe then it will be time for more rate hikes. But there sure as hell is not going to be 4 rate hikes at the minimum, and potentially more than 4. That's bonkers. That's insane. The banks are trying to, trick retail. I don't think retail really matters that much. Why are they saying this? I can't figure it out. Why is Kolonovich going in and telling his clients to buy the dip right now when we haven't reached a short-term bottom yet? The bottom, assuming that you trust in the Fed, the bottom's going to come when Powell flip-flops. It's not going to come before Powell flip-flops. If you want to make the case to buy the effing dip, it's going to be on the day that Powell changes his mind. But you can also, on that same time, even after Powell changes his mind, you can make the bear case and say, hey, what Powell's going to do, he's feckless. He can't save this market, and so, you shouldn't buy anyway. But you certainly can't make the bull case before he flip-flops when they're talking about, raising rates, and the consensus now is for 4 rate hikes. 4 rate hikes would mean, really, second Great Depression. We're that fragile. This is not a simple thing. 100 basis point rate, hiking of the Fed funds rate. The only way that the Fed got away with rate hikes during the Trump administration was because they were doing it on the heels of the Trump tax cuts, which were themselves sort of a secular justification for increasing valuations, because it made companies more profitable. They reduced all the taxes on corporations, so therefore those corporations suddenly were more profitable. They were worth more money. And so you're going to drive stocks higher. And so Powell was able to mask the pain of hiking rates a few times after those corporate taxes went through, and there was the promise of the corporate tax cuts. But once the glistening, the glim or the shine of those tax cuts wore off, then all of a sudden people only felt the pain of the Powell rate hikes. So unless we send stimmies into maximum overdrive, get maybe multiple $2 trillion stimmy packages, and mail out checks maybe every month to people, unless we see an even greater uptick in inflation, we would have to see really this inflation sustained. That is the only way that you wouldn't have a nominal decline in stocks. And hey, if Powell's hiking rates and Treasury rates are rising, that's not a great time for the federal government to be sending out stimmies. The federal government wants to do that when rates are at all-time lows, because the federal government has to at least make the interest payments on all of this money that they're spending. Powell's talked about this. Oh, you don't want fiscal and monetary policy working against each other. It's a euphemism for, we want to subsidize government debt when they need to go deeply in debt. We don't want the government to, increase its deficit as we are subsidizing less of their expenditures. We need to be monetizing that debt. And so if you look at all of the factors outside of the Fed bubble, there is no room for rate hikes from their perspective. If I were Fed chairman, would there be room for rate hikes? Of course. But I'm not Fed chairman. These people don't think like me. They think like themselves. And if you look at what they care about stocks. They care about bonds. And stocks and bonds are both moving in the wrong direction as far as they're concerned. You could argue, okay, well, bonds are moving in the right direction because the Fed is saying they're going to raise rates and bond yields are rising. Bond yields look like they're getting their talking points from Jamie Dimon. That's what it looks like is going on now. I've heard B of A putting out notes that say very similar things. All of the big banks seem to be parroting this fantasy of, great economic growth is on the horizon. And if that were true, if you really believe that, then I guess it makes sense for bond yields to be bid up. But that's not where we are. We're not the America of 20 or 30 or 40 years ago. America today has a lot more in common with a post-2008 Europe, a continent of degrowth, a continent of negative interest rates. That's what it means when you have negative interest rates. That's a sign that your economy is declining. And we've had ultra-low interest rates in this country for over a decade now, but they've at least been positive. We've had some growth here. But if anything, if the situation is going to change, it's not going to change to the upside. Hell, we're in Great Reset territory. People are trying to get rid of carbon fuels. You want to try expanding the economy when you're getting rid of energy, the lifeblood of the economy? These renewable resources are not going to replace fossil fuels. You're not electric cars are not replacing conventional cars. we're just going to have less energy, we're going to have less resources, people are going to have to drive fewer miles every year, and that means that we're going to have a slower, a smaller, and a less robust economy. So none of this makes sense. Stocks are not going to go up because the economy is growing. Stocks are not going to go up because of Fed policy if the Fed is raising rates. Bond yields are not going to continue to rise. Remember, when bond yields go up, that means the price is going down. If we are having, an economic crisis, if stocks are crashing, if the U.S. economy is going back into recession. Because make no mistake, 4 rate hikes, that'll put us in the grave. And I don't say that like because I'm scared. I want that to happen. This cycle is terrible. We need to purge all of the underbrush. We need to burn off all of this, dead skin. We need to shed this dead weight. We have been going on in the everything bubble for far too long. So I guess my question is, what's their angle? They're not this dumb. Jamie Dimon's not dumb. And I'm not so dumb that, these guys are just so galaxy-brained that I don't know what they're talking about, that they're way over my head. That's not the case either. If they were right about this, they would give a coherent reason. There's no reason that anybody's putting out there to justify this. I don't know why the banksters went in and told retail to buy the dip today, but it appears that it worked, because I told you the Nasdaq closed green and we were at the lows in correction territory. What did the banks gain from misleading the public this way? Is retail really that powerful? Is going in and manipulating, can you really manipulate the entire market like that? Because, I look at it as, the retail, even all retail, they're like a school of minnows in the sea that is equity markets. But maybe retail has gotten so big in the last couple of years, thanks to the STEMI stuff, that manipulating the retail crowd does allow them to position, even because it's one thing to do that with individual stocks like GameStop. But for the whole, I just don't buy that. So does that mean they're fooling other money managers? I don't know yet. And I don't know that I'll ever know, because there's just certain things we don't have data on. But for whatever reason, all of these big banks want everybody to believe something that isn't true, that is clearly false, and will be proven false by the end of this year when we see that the Fed has not hiked rates 4 times. And if that does end up to be true by some miracle, I will apologize. And I'll be happy if the Fed hikes rates 4 times this year. I just don't think that the Fed is that stupid. I think that the Fed has their goal. Their goal is to make sure stocks always go up. The Nasdaq's down almost 10% at this point. It was down 10% today. I don't think that, the Nasdaq alone is enough for them to reverse course. But the S&P, when the S&P gets into correction territory, which we're not there yet, we're nowhere near there yet. But if that happens, these rate hikes are gone forever. However much the Fed has hiked rates by that point, I assume they'll get 1 hike, and that's it. That's the max. And that would be only to save face. That's me being as generous as possible. I've said before, there will be no rate hikes, there will be no rate hikes, there will be no rate hikes. And I think that is still more likely than not. But if they get any, it'll be 1, just so that Powell can prove to himself that so he can hike rates in the face of a falling stock market. Stocks will completely fall out of bed. And then the next day, Powell will be out there saying, hey, we're done with rate hikes for the year. That's what he's going to say. He's going to say no more rate hikes this year. And then the next thing we know, he's going to cut that 25 basis point hike back down to 0. So that's all I have to say about that. I guess I'll see you folks back here tomorrow.